Hey guys, welcome back to yet another video. Best place for long-term stock investors. So, what we're going to talk about today, number one, we're going to talk about British American Tobacco cigarette company, right? It's have had a lot of challenges, and we'll give our thoughts on whether these challenges will continue or not. And then the next part will be about the inflation in the US. It went up by 9% in June year on year, one of the biggest ever. So we'll give our thoughts on what's happening and how we can position ourselves going forward. Hey guys, as usual, none of what we say should be taken as financial advice. If you want that sort of advice, please speak to a pro, because we're not. And of course, as well, we do not own any of the shares mentioned in the slides.
So you want to build a 6 to 7 figure stock portfolio but don't know how? Don't worry, in our free training, which is coming on this coming Wednesday, we'll show you our 3 steps method on how you can actually find a potential multi-bagger stocks, how you can avoid your mistakes that you're currently making, and most importantly, when to exit your position. So if you're interested in this free training, make sure you check it out. The links are in the comments and description.
All right, Jonathan, so let's begin with some of your discoveries about British American Tobacco, right? BAT. Sure. So as we can see, since about 2014-ish, they're down about 85%.
Yeah.
That is absolutely
that's max
crazy.
pain. But if you look at the overall, how have they been performing, right? They are actually down like 73.23%.
Slightly less pain.
Yeah, slightly less pain. But why have they been dropping so massively? I'll cover it in the next few slides. Okay, so number one, if you follow the latest news, the government actually this actually was in January 2022. They actually announced that they wanted to impose 3 times their excise duty on vape gels and liquids. So previously, when vape was introduced, right, they only like imposed like a 40 cent per ml excise duty. So right now they triple the levy on this kind of products.
Right.
And sad thing is that BAT also diversified their products into vape. So yeah, just when they wanted to like venture into this kind of new category, right, then they kena.
But in a way, they should have foresaw that, because I mean it's within the same category.
Yeah,
right?
I'm a think that because they are afraid that the vape they are actually stealing their market share. So they want to, like, in a way, I think I have to ride the wave.
For sure.
So I have to diversify.
Definitely.
And yeah, so yeah, in the next slide is this Views is actually their vape products.
The brand, huh?
Yeah, their brand. So it's that is how it looks like.
Unfortunately, we don't use vape, so we can't tell whether or not
it's
a good product. We won't know how to tell.
Yeah, exactly. Okay, so this is another challenge that BAT will face, which is that our health minister, Khairi Jamaluddin, actually announced that Malaysia will decide to not sell smoking products to anyone born after 2005. Now, why this is a big challenge? Because if you look at our overall population, right, so about 30% of our Malaysian total population actually comes from people who are aged at 0 to 19, which I roughly estimate is at the age of after 2005. Correct. These are your future potential customer that wants to buy tobacco. But now you restrict, which means there will be a limited revenue coming going forward. Yeah. But you also never know whether they will sell it like illegally or maybe even like go under table.
No. Let's be honest. It's definitely going to happen, because it is already happening.
Yes, correct.
So the more and that's the thing with a lot of these quote unquote sin products.
Yeah.
The more you ban, the more people want it.
Yeah, exactly. Right. Okay, so that is the challenge. So now let's have a look a little bit about their financials, right? Okay, so if you look at their sales, it pretty much tells us a lot of things already. Sales are going down. Not only that, their profits also are going down. A reason is because it's mentioned in their annual report. They mentioned that one is because of the excise duty that the government has been imposing. Another one is because of the black market, because there are some illegal transportation of It's like from another side of a country that they're also selling tobacco. They are shipping inside of Malaysia
There's
illegally.
what's the word? Contraband, I believe.
Yeah, something like that. Yeah. And yeah, so all of these actually are affecting BAT's financials, their sales and whatnot. And even though they have actually been doing a lot of reducing costs, restructuring their costs, and try to like minimize the cost that they're actually currently paying, right? Even though they are doing that,
it's not going to be cheaper than the whatever.
Correct. It's not really helping their business operation. One thing is because when they try to like consolidate everything, right, they are actually hurting their sales. One thing, and then another thing is that profits don't seem to be improving.
Why is it that when they consolidate, it doesn't work? I'm very curious about that.
Yeah, actually, I'm not too sales part is definitely one thing.
Right.
But the profit margins, I think, operating margins, I think it was okay.
Okay.
But then because of the tax and then all the stuff,
eats into it.
Yeah, it eats into it. So that's all this kind of thing that actually impacted their sales.
So, I mean, to give a sense, it's quite crazy, right? 2013, they're making 4.5 billion. Did I say that right?
Yeah, correct. 4.5 billion. And now they are actually
like
making a 2 billion-ish. So it's like a 50% cut already. Yeah.
Wow. Okay.
That's actually a pretty sad,
Okay.
sad thing. And so this is another interesting that I've actually discovered is that when you look at their balance sheet, right, they're actually now currently having a growing net debt. So when I first saw this balance sheet, right, initially my first thought was that, okay, maybe are they expanding their business? Are they buying like more capex or more properties to manufacture their tobacco or whatnot? But then it doesn't make sense because our previous slide, they say they're trying to restructure their costs and whatnot.
Yeah,
right?
so what is the reason?
Yeah, okay, so I was trying to like see what is happening in their balance sheet, and then to my surprise, okay, they are not actually expanding their business because their property and plant equipment actually has been reducing quite a bit. And if you look at in 2015 to 2016, right, there's actually a massive drop in property and plant equipment value. The reason why there's a drop is because in 2016, they actually closed their one of the core business, which is their manufacturing of tobacco factory in PJ. So that actually not only impacted their business, but it also hurt their balance sheet and whatnot. Everything got hurt because of this core business. You can see in the previous slide in the sales, right? The sales is actually declining from 4 billion to 2 billion.
Yeah, a big one is definitely because in 2015, right, you can see the decline starts to happen.
Yes, correct.
But then, of course, they would argue, if they didn't close it down, they may have bigger losses.
Yes,
because
correct.
they are engaging in lower margin products.
Yes,
nowadays.
Correct. And also because of all those excise duty and and the illegal competition, illegal product that is sending into Malaysia. Okay, so what I found out is that why the reason their net debt has been increasing is because their short-term borrowings have actually been rising a lot.
There you go.
And the reason why they actually have all of these short-term borrowing is because the company is unable to pay their working capital. They mentioned that.
Challenging,
So they actually mentioned that because they have a high sales, which resulted high receivables, and not only that, they also have incurring a high inventory. So there's a lot of stock inside their stores, and also it is used to pay the excise duty.
That's crazy. Wait, they use the inventories to pay?
No, they use the short-term borrowing to pay all this stuff.
Nuts.
So it is a pretty sad company that's how I put it. Okay, this is also another justification on why they have to get a lot of short-term borrowings. So if you look at their cash conversion cycle, is how would I explain it is basically from their product to cash. How long does it take for it to convert? And if you look at their cash conversion cycle, which is the blue color bar, you notice that it has been increasing quite a lot, which tells us that they are having a tough time to convert their inventory into sales. And another thing that is further justify why their cash conversion cycle is increasing is because of their accounts receivable. They has been also increasing.
Right.
Which means their customers are actually having the higher bargaining power.
Correct.
So, and if you think that they can pay you dividends, right? But no, sad thing is that their dividend also
but their dividend yield is very good, right?
Yeah. But then come on, guys, dividend yield. I don't know about you guys. I don't know why people love to look at dividend yield and invest in a high dividend yield company when these are the metrics that you should be looking at, which is one is how consistent are they paying their dividends, whether is the dividend growing, whether their company sales or even profit is even growing. I think those are the metrics that's even more important than just looking at high dividend yield, that percentage. Really. Yeah. So in our final conclusion, so this is our takeaway. So if you're planning to invest in BAT, I think this is something that you may want to take note of. So the first one is that their growth is capped. They are the largest, although they are the largest market share in Malaysia, but their sales are only doing within Malaysia. So there's like no external market that they can actually penetrate to. And another thing is because they have large headwinds ahead. One thing is because of the triple increase in excise duty, and then a lot of like bad stuff that's happening around the tobacco industry, especially in Malaysia. And the next few points is, as I have already rightly pointed out in a few slides previously, is their financials has been worsening. Not only their cash flow has been dropping, sales dropping, they also are unable to fork out any dividends to pay to shareholders. Right. And on top of that, they are borrowing more short-term debts. So these are like a key.
Life is hard.
This is the key like red flags that you need to take note of. And last but not least, I think BAT is in an industry where they are actually at the declining stage. Okay. So if you don't know the product life cycle, there's 4 stages. So first is the introduction, when they first introduce the product. Then there's the growth, when you're actually growing a lot. And then there's the maturity, when everything is like stabilized. There's like a lot of competition, but you're kind of like a cash cow kind of thing. But then the last stage is declining, means your customers are reducing, sales are reducing, profits are reducing. So I believe this is where BAT is currently standing.
Fair enough. Yeah, so thank you so much. Let's move on. Anything else?
No.
All right, let's move on to inflation. Yeah. As usual, guys, if you like this sort of content, or maybe if you find someone who like this sort of content, please share it with them. Like, comment, subscribe. Click on the bell so that whenever new videos are out, you'll know it.
Okay, so the next segment we're going to be looking at is inflation, and is it gonna have are we going to be having a potential recession?
Yeah.
So MJ, tell us more about this 9.1% increase in inflation.
So it's quite crazy. If you guys know the CPI, which is like the standard measure for inflation in the US and around the world, right? CPI is just a basket of goods, which includes things like rent and food and whatnot. Basically rose 9.1% June year on year. Sorry, so this June versus the other June lah. So that is the biggest, definitely this year, definitely probably this decade, potentially this decade. Certainly during a non-recessionary period, it's quite crazy.
Yeah, I believe that there's a lot of analysts, they estimate the inflation rate to be around like 8.9, 8.8, right?
So it depends. The analysts, I'm not so sure about analysts too much, but the expectations or the sentiments of the people, right, is somewhere like 7%, give or take.
Okay.
Right?
So I actually am reading a little bit about these notes, right? It's interesting that if you exclude food and energy, the core CPI actually rose about 5.9%, which is 0.2 percentage point more than the estimates.
The estimates.
Yep.
Because energy costs has went up, as we know, food has gone up as well. And actually, the one thing that I didn't add here in my slides is actually that services are also a big factor.
Okay, that's interesting. Okay, so this is I believe the response by the Fed.
Right. So there's going to be a decision late July, actually probably next week, right? Where they were saying that they want to have a 75 basis point rate hike. So for those who don't know, that's about 0.75%. But because of what they just saw, they could be increasing it to 1% or 100 basis points.
Yep, it makes sense.
So that's the talk in the market right now. And of course, a lot of these fears have really got into the market as well. So
but actually, if you take this into account and you plug it into the current stock market's movement, right? I mean, I believe this happened last week. So I
Yeah.
think last week's the Nasdaq and even our KLCI index, the tech stock
Yep.
index, they actually have been pretty okay with it. Surprisingly,
Yeah,
I think it's because they expected this already
Yeah,
to
so
happen.
you have to understand that whatever happens in the news, right, is something that's anticipated 3 to 6 months ago.
Yep.
So it's no surprise, right? It's no surprise that you're seeing what you're seeing. But nevertheless, what is happening now, or rather what is likely to happen in rather 3 months, 6 months, should be what's the data telling us right now.
Yep.
Right? So
Correct.
that's something to think about.
Okay.
So now a little bit of education, the way it works, right? The Fed works is that they will lower rates,
Yep.
interest rates, when there's a bad economy or when they want to push inflation up. So for those of you who don't know, the Federal Reserve has a target, right, of hitting 2% inflation,
Yep.
right? And for the longest time, especially during the past decade or in the noughties, right? Not the noughties, in the 2010s, right? They couldn't get it, right? They couldn't go above 2%.
Right.
Right, so typically that's how it works, and that's why interest rates have been lowering, right? Since then. So then, when do you hike rates, right? You hike rates when the economy there's growth. So, for example, when the economy is doing very well, you get potential for euphoria. So if you increase rates, right? So what you do is you make it hard for people to borrow money, so that people who are overly excited, who don't even have a proper business plan, will think twice before they go into it, and they will prefer to save money. Similarly, when there's inflation, you want to increase the interest rates so that you can help. So that's more of a social, economic issue. So you want to increase the interest rates so that when people experience inflation, at least the savings that they have in the bank is also growing accordingly.
Yeah.
So that's more of a social part, because you don't want people's savings to erode so much while they are now spending so much, right?
Yeah.
And income inequality, things like that will start to happen.
A good thing right now, fixed D is going to be increasing in
Yeah,
interest
yeah,
rate. Yeah, a little bit
Yeah, yeah.
percentage. And actually, not only that, I think property buyers also from like a few months or even 1 year ago, you'll be very happy because your price will be much more expensive right now because of interest rate and all the materials and whatnot. Okay. So what does this tell us?
Now, it's also important to look in history for the US, right? When it works.
Okay.
And when it doesn't work. So when it doesn't work, right, it was in 1974 to 1975, there was a recession, right?
Yep.
And this was a period of actually high growth, but also high inflation, right?
Right.
So now see, it's very confusing, because on one hand, you got high growth and high inflation, and you think, right? Of course, I have to raise rate. Sorry, if I should be raising rates, right?
Yeah, to taper off the overheated economy.
But ironically, there was a recession, right? There was a recession, and once that the high growth period was during that decade, but those 2 decades there was a downturn, and then inflation occurred. They raised rates, bang, like it prolonged, and they raised rates. They lower rates.
Yep.
Too fast. Right, from something like 8% to 4%. This was under Arthur Burns.
Wow.
Yeah.
Okay.
So that's when it didn't work. Now, when does lowering rates actually work, right? Very well. Ironically, this is during the Volcker era. So Volcker era was known for a high amount of increase in interest rates.
Yep.
Right. But with the recession from 1980 to 1982, Paul Volcker actually reduced some of the rates. And the key thing is that he reduced the interest rates, but it's still higher than the inflation rate.
Oh.
So you see, do you see now the technical difference, right? So he did that during periods of high inflation, but the growth was low.
Okay.
So that's when it worked. And I think, wait, did I put it here? Okay, never mind. Right. So you can see here, right? So this was, let's call it during the Volcker era, right?
Yep.
Where interest rates were close to
It's like double
almost
digits.
14,
Yeah. 13%.
14%.
13.8.
So and then this is the inflation rate lah, right? It went up to 20%. So they try to hike. So to combat lah, right?
Oh, it's insane, man. Previous, I mean, looking at the past, right? I mean, I cannot even fathom if we are having like a double-digit interest rate at this current era, lah. It will definitely be a shocking to this market. But okay, so what is happening right now?
So today we are in a low growth scenario.
Okay,
and there is talks and risk of recession, right? But the inflation, we are at the beginning stage of a potentially high inflation period, or stagflation they call it.
Okay.
Right. So and of course rates are being hiked lah.
Yep.
Now what are the key things you want to look at, right? The first is that, remember, for things to work, typically the interest rates should be better.
Yep.
Should be better than inflation, by and large.
Yep.
That's not the case today. So even with the rates being hiked, right, you're looking at sorry if I put it's not 7.5 here.
Yeah,
it's actually about 1.75% to 2%.
Okay.
So I got this wrong. Sorry, guys. But you can see, right, there's still a big difference. Now, the second thing is that what is causing inflation, right? And I'll talk a little bit about later on. But the fact of the matter is, inflation actually will not. It seems like it's not going to slow down.
Yes.
Because of various reasons, such as supply constraints, things like that. And growth right now is a question mark also. Whether if we are in high growth, then maybe it won't be as bad. Maybe.
Can we say something like how is the attrition rate that the company is facing right now? So for example, if there is more layoff means there is the company don't really see growth at the moment. Yeah. So when they start to hire means there's a high growth. Can we use that as like an indicator?
In a way, and also indicator of future spending.
Right. Correct.
Right.
Okay.
So there's a lot of data here, but that's the basic idea lah, right?
Okay, so tell us more what will happen in the future.
So usually in high inflation periods like the 70s and potentially now, it's always typified by a few things. One, energy prices going up.
Yes.
Uncertain politics.
Okay.
Right. Usually that's how it works. So why it seems that, to me at least, inflation will persist is because whether at the current rate, I don't know, but like energy prices, for example, you can argue it will normalize. Politics, that's a very uncertain thing.
Yes.
But certainly now it's a lot more uncertain than before because of deglobalization. So we are becoming more tribal.
Yep.
Then spending. Now, here's an interesting point that you brought up, right? It's actually not reducing thanks to the COVID revenge spending. And then in the US, right, funny enough, the savings rate, right, and the capacity for banks to loan out money is actually pretty decent. So that's not stopping. And then right now, generally speaking, it's low unemployment. We hear the news of companies so-and-so having reducing their employment.
Yes.
But it's actually not really reducing.
Yeah, actually, if I recall, when I was reading some articles, the reason why they are laying off is because those are the newly recruit employees to mitigate those that took the leave. Basically, they didn't come for work. Yeah. So when all of this after COVID, right, when they are coming back to work again, then they start to lay off this kind of employees.
So then the last bit is supply capacity lah. So actually the US is, I'm not sure if they're all-time high, but they're on the high side, meaning to say that they can't expand. I mean the supply. Sorry. So the supply, if the supply cannot expand and the demand is consistently going up, then you get inflation.
Right. Okay.
So now, so what's my conclusion? Really, it's actually always hard to predict lah.
Yes.
But right now, it's almost impossible for the company the country or the Feds to raise rates higher than inflation. Right? It's just really difficult. I mean, 1.75% or 2% to close to 6, 7, even 5%,
Yeah.
right? It's really, really hard already.
Yes.
Second is third is second rather is going to be that supply will have issues continuously because of deglobalization, probably thanks to Trump and things like that. And of course, with deglobalization, the likelihood of war will start to increase further. So it's likely to persist. But this again, like I said in the first part, it's really hard. So.
Right. Okay. So from all of this, right? What are the actionable insights that we can actually use or like prepare for all of this? What do you think that we as investors should like do right now?
Yeah, so what you want to do is you want to understand your business. So what happens is that every business has sales and costs,
Yes.
right? And so the first question you want to ask is the company that you're buying, especially for the long term, does it have pricing power? So is it able to ride on the inflation wave,
Okay.
right?
Some sort of mode, is it?
Something like that, yes.
Okay.
So if you can raise prices consistently and inflation, rather to keep track of inflation,
Yeah.
then that's not too bad. The second thing also you want to look is the cost, right? So we know that, especially in the US, things like labor unions are going to be a lot stronger. So this will mean persistent wage rises. So in the service industries, you can see this, right?
Yeah.
Amazon,
Yep.
you're hearing rumors already now that things like that will happen. And then also the input costs for like their raw materials, that will be going up as well. So not only do you want a company that can raise prices, but you can raise prices faster than your
The increase in cost of your input.
exactly.
Alright,
So
okay.
that I would say is the actionable insights.
Okay, that's an interesting point that you gave for inflation and the potential that's what's going to happen in the future. I think that's about it.
Yep.
Again, guys, if you find this insightful, if you love this type of content, make sure you share this out to your friends and family. Also, if you haven't liked this video already, please help us to click that like button so that it helps us to boost our algorithm so that you can show to more people. Subscribe to our channel if you want to watch more content like this and click on that notification bell so that you know when new videos are out. And don't forget to follow us on all of our social medias, our Telegram, Instagram, even LinkedIn. We also got a LinkedIn account also. Yeah, feel free to follow us all of that and we'll see you in the next one.
Yep.